Hi, many of us blindly invest in gold using the digital gold platforms, all because these platforms provide to invest using the apps which can be easily accessible from our mobile, and we can invest as low as like a 50 rupees, 100 rupees or 1000 rupees, and most importantly we can liquidate as and when we need, and in fact we can request for the physical delivery of the gold. All because of these eye-catching features, people blindly investing in gold using the digital gold platforms. But whether have you ever thought of who will regulate all these gold platforms? What if something went wrong with the investment? To whom you have to approach? What are the hidden costs involved? Or else, are there any other alternatives which can be more efficient, more cost effective, and more safe than using the digital gold platforms? Let us discuss about all these aspects in this video. Now, let us understand what do you mean by digital gold. Digital gold is a platform where you can invest in gold and hold it in a digital format. The minimum investment may be around 50 rupees, 100 rupees or 1000 rupees. All these platforms provide an app so that you can assess your investment using the mobile phone. And when you invest X amount of money, equal amount of money will be invested in physical gold, and they will store it in a vault, and they will say that this will be insured. And do remember that this will be stored by the trustees, and it is not in a demat format in your name. The most important aspect is you can invest and you can liquidate as and when you need. And in fact, using these platforms, you can request for the physical delivery of the gold. All because of these platforms features, many are attracted towards digital gold nowadays. But as I mentioned in my introduction, have you ever thought of who will monitor all these platforms? What if something goes wrong with your money? And what are the hidden charges? Let us discuss one by one. The first important aspect is to look into who will regulate the digital gold platforms. Recently, SEBI issued one notification where it is clearly mentioned that SEBI is not monitoring or else not controlling the digital gold platforms, and in fact RBI is also not controlling. So when it comes to regulation, it is purely unregulated as of now. It is purely runs based on the trust between you, the platform providers, and also the trustees who hold the gold. If anything goes wrong, then obviously your money is at risk. As of now, no such a bad incidents happened, but it doesn't mean that in the future such a events will not happen. So from regulatory perspective, what I am trying to highlight here is no one is currently regulating these digital gold platforms. This is a most important aspect you have to look for before exploring the digital gold investment. Now let us discuss about the platform restrictions. The first and most important restrictions is the limit of investing per pan or else per individual. You can invest up to 2 lakh only, beyond that one you can't invest. The holding period to the max is around 5 years. They will force you to sell before 5 years, and if you still want to hold it beyond 5 years, then you have to pay certain charges for maintaining the gold at their level. It is highly costly way of holding the gold post 5 years, because charges is around 0.05 percentage per month. I am highlighting here, it is per month. If you multiply it per year, that can be a kind of a big cost when it comes to investing in digital gold. And these limits are set by the platforms. There is no such a regulations as of now. So for that reason, whatever the regulations or restrictions are there, they are completely set by these platforms. So you have to be very cautious before exploring the digital gold platforms. Let us now look into the hidden costs of investing in digital gold. The first one is the huge spread between buying and selling prices. And moreover, these buying and selling prices are set by these platforms only. There is no such a regulation, and the spreads may be like, as you notice here, it ranges from 2 to 4 percentage to 3 to 6 percentage. I mean, take for example, if you buy at 6,200 rupees per gram and sell it at 5,950, then obviously the spread is around 4%. So this is, I think, the biggest hindrance when you explore the digital gold as an investment. First thing is, these buying and selling prices are set by these platforms only, and I don't know what is the procedure or else how they will arrive at these buying and selling, and why this much of a big spread between the buying and selling price. Now let us look into the GST impact on digital gold. Whenever you buy digital gold, you have to pay 3% as a GST. But if you compare other available options like a gold ETF, gold mutual fund, and SEB, there is no such a cost involved. So 3% upfrontly you are paying as a cost of investment when you explore the platforms of a digital gold. This, I think, is a second biggest cost which you have to look for. The third angle what you have to look for is the taxation. Taxation of a digital gold is equally like a physical gold. If you are holding less than 24 months, then whatever the gain is there, on that gain you have to pay as per your tax slab. And if you are holding for more than 24 months, and on the gain whatever you will earn, on that gain you have to pay the tax at the rate of 12.5%. However, if you compare that one with a gold ETF or gold mutual fund, you notice that it is equal to almost same. But in case of SGB, if you are holding till the maturity, then the whole gain is tax free. This, I think, is the biggest advantage compared to the digital gold or physical gold, and in fact for the gold ETF and gold mutual fund. Now let us collate all the risk which I explained in this video. The major risk is there is no regulation, and gold is held in a trustee ownership. I know that they will say that it is secured and it is insured also, but to certain extent it is completely based on the trust. And forced sale, as the maximum tenure of the holding is around 5 years, you are forced to sell, or else you have to pay the hefty charges to hold it in a digital format. And buy and sell spread is very huge. You notice that around 2 to 3%, which is a biggest concern for me. And moreover, the GST impact. These are the major risks when you explore the digital gold as an investment avenue. Now let us look into the cost and regulation comparison of digital gold versus gold ETF and gold mutual fund versus SCB. The biggest risk which I am again highlighting is the regulator risk. As I mentioned earlier, no one regulating the digital gold. However, in case of a gold ETF and gold mutual funds, it is regulated by SEBI, and in case of SCB, it is regulated by RBI. Ownership proof, you have to completely rely on the trustees, but in case of a gold ETF and gold mutual funds, it is in a demat format or else in electronic format, especially in case of mutual funds. So they are very secure in terms of security feature, and in case of SCB, it is government recorded. Counterparty risk is very high in digital gold because you have to completely rely on the platform and the trustees. But in case of gold ETF and mutual fund, as they are regulated, the counterparty risk is very low, and in SCB it is almost like a nil. Annual cost, this many people will ignore. Look at the cost structure. In case of digital gold, it is almost around 1.5 to 3%, and in case of gold ETF and mutual fund, it is maybe 0.5 to 1%. In SCB, it is very negligible. Investment limit, in case of digital gold, it is 2 lakh rupees, but in case of gold ETF and mutual fund, there is no such a higher limit, but in SCB, it is 4 kg per year. Holding limit, again in case of digital gold, it is 5 years. In case of gold ETF and mutual fund, it is unlimited. You can hold it as long as you wish for. And in SCB, it is 8 years, but you can exit before 8 years also, selling in a secondary market whenever you need, or else you have to exit it after 5 years by selling the bonds to the RBI itself only. Now finally, you have to look for which is better. As you noticed, gold ETF, gold mutual funds, and SCBs are far superior than the digital gold platforms, mainly because of the regulation involved, the cost structure involved, and the limitations of the features are involved. So finally, what I am trying to highlight with this video is that Don't explore the digital gold platform just because they will provide the fancy apps in your mobile. You can invest as less as like a 50 rupees, 100 rupees or 1000 rupees and liquidate. And moreover, you can request for the physical delivery through the digital gold platforms. Look at the risk involved, look at the cost structure, look at the restrictions in terms of digital gold, and finally take a call. Thank you for watching this video.